Suraj Estates, which listed at 344 rupees a share, which is nearly 4.5% discount to its issue price of 360 rupees. We have Rahul Thomas, who is the director of Suraj as Real Estate Developers, joining in now to discuss the growth outlook for the company going forward. Rahul, good morning. Thank you so much for joining in. First up, many congratulations. It's a big day for you and your company today. I'd like to start up by asking you, what are the projects that are lined up for the company in 2024 now that you have listed? I'm sure you can share some numbers as well, and how much of this IPO money you plan to utilize to fund those projects going forward.
So, hi, good morning. Thank you for having us. It's a proud and momentous day today. I want to thank all the investors who instilled their confidence in us, including our anchor investors and everyone who's part of our journey. In terms of our growth perspective, we're expecting to launch 3 new projects up to March. So one, of course, is on Mount Mary, Bandra, which is our focus area. That's the next sub-market we'll be targeting, and a commercial development on Tulsi Pipe Road. So these are the 2 important launches which we have, apart from the 13 ongoing sites which we're already currently doing.
All right. Suraj, the last time you joined us, you did say that your pipeline that you have, the ready pipeline is close to 7.5 lakh square feet, and given the sort of realizations that you enjoy in the areas that you operate in, it could amount to inventory worth or sellable inventory worth nearly 3,750 odd crores. For the next financial year, I just want your thoughts on, what are the projects which will be launched? What are the kind of pre-sales that you anticipate in FY24? And as a result of which, what do you think will be the cash generation in all of next year?
So in terms of our pre-sales, last year we did 635 crores. We, of course, we want to better that this year. So that's our target up to March. So I think we would focus on March numbers, and we're very confident already. We only have 3 months left. So we're very confident on getting our March pre-sale numbers. And post which, of course, we will be focusing for the following year. So in terms of our pre-sales, as I told you, 635 crores, we expect obviously an increase this year, and obviously we want to better that the following year. So that's the target, and we're confident on achieving those numbers.
Rahul, your company is largely focused on the MMR region. How much of this is redevelopment? And if I may add to that, what is the margin differential that you have on a redevelopment project as compared to a freshly developed project that your company does?
Sure. So of course, as we know, there are no vacant lands in Mumbai really. So I mean, most of the mill lands are already developed. So very few vacant parcels still left. So redevelopment is the way forward. Either it's 33/7 cessed property, which is structures which are existing prior to 1960. And then you have society redevelopment, which is more common, where it is structures which are 30 years old. So these are the primary 2 forms of redevelopment, which we have expertise since '86. We've been doing both these forms of redevelopment. In terms of your margins, we are looking at in 33/7, around 40% is what the margins we target to achieve. And in a vacant land, I mean, it goes because of the upfront land costs, or I think 25% is something which, in my belief, is the margins which you get in a vacant land proposal.
And what's your overall split between fresh projects, redevelopment in the 33/7 and the 30-year-old ones that you're talking about?
Yeah, so we've tied up with 3 societies under 33/7B, which is the 30-year-old old societies. Apart from that, most of our projects are already bought at historical cost. So the 16 lands which we discussed in terms of our upcoming portfolio, these are lands already acquired by us, and maybe 3 of them are vacant. So those would come under pure play normal development. But all the others are 33/7, and we already have passed a lot of stages in terms of IOD. We've got the plan approval, we got the tenant consent, so we merely have to put money into construction and vacating of those tenants and start the work. So they all at very advanced level, and obviously we're going to use some part of the issue proceeds for pumping up the upcoming projects.
So this is over and above the 7.5 lakh square feet land that you earlier apprised us of, right? A sellable place that you have.
No, that's including. So we are doing 13 ongoing sites today. The 16 upcoming portfolio is what we said is in a very advanced stage. So many of them we have plan approvals merely, and these are all land bought at historical cost. So margins are much higher.
And what about this 35 crore that you've kept to purchase additional land? Where will that be? I mean, in Mumbai for 35 crore, how much land can you really buy in the areas that you operate in especially?
Right. So we are looking at society redevelopment, which is 33(7)(b), as I told you. That is, so there's not really a major upfront land cost. It's more of a development agreement of sorts where you have to tie up with societies. So that does not really entail any upfront land costs. So our strategy going forward would be to tie up with societies and maybe larger societies. So we have, a larger carpet area for sale and adding to the pipeline. So that is just kept as a war chest of 35 crores. I mean, of course, we have a lot of receivables coming from our ongoing sites as well, since the debt is repaid. So I think that both put together will have a good kitty for the land acquisition and growth.
So what is the current debt level, Rahul, post the IPO, and do you expect cash flows to be an issue for you going forward, considering you have done negative cash flows in the past? This FY23, you had around 180 crores of free cash flow. What is the outlook on both of them that you can share?
So going forward, debt to equity ratio will be between 0.5 and 0.6. So we are very comfortable with that debt equity ratio. And we are very confident going forward we will have a lot of surplus cash coming from the ongoing proposals itself. So the 13 ongoing sites itself will generate a lot of cash for us.
All right, Rahul, we leave it at that. Thank you so much for joining in. Wish you good luck as a public company as well and for the remainder of the financial year. That was the management of Suraj Estates there. 4.5% currently lower. 360 was the issue price, currently at 343. Let's shift focus.